I think the gold rush might be over already. If you're looking at Bitcoin, it's the production rate is very low right now. It's getting down to 3.125 per block. So, technically gold rushes are a frenzy and it's quite frantic, and people are able to get a lot of gold out of the riverbeds or whatever, if you want that direct analogy. And I think we're past that. There is traditionally a separation between money and currency. If you look it up and you look at some charts, there's money on this side, which is more of a conceptual, abstract thing, and then currency on this side, which is physical form, the method you transact it with someone else, or a coinage or something. But with Bitcoin, that's deconstructed. It's one and the same. Money and currency is unified. And that's one of the big game-changing things about Bitcoin, is it changes that. Yeah, it just seems to be difficult for people to understand, and I think big numbers have a thing to do with it. It's almost like the concept of the big lie.
Mhm.
The bigger the lie, the easier it is to believe. And fiat is the biggest lie, and this is why the numbers they keep throwing at us are so big.
Samson Mow begins by discussing the concept of the gold rush in relation to Bitcoin. He believes that the initial frenzy of Bitcoin mining, akin to the gold rushes of old, is now over. Mow points out that the current production rate of Bitcoin is significantly lower, with only 3.125 Bitcoins produced per block. He suggests that the true gold rush period was during the earlier eras of Bitcoin, particularly when the block rewards were higher. However, he acknowledges that this period might still be ongoing in a different form, where the focus has shifted from mining to accumulating Bitcoin. Mow agrees with Michael Saylor's perspective that we are now in an institutional phase of Bitcoin adoption. This phase is characterized by large entities trying to buy Bitcoin rather than mine it. He predicts that this phase will continue for the next decade as the Bitcoin standard starts to emerge. According to Mow, Bitcoin will eventually be used to denominate transactions, and central banks worldwide will hold it to preserve purchasing power. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think the gold rush might be over already. If you're looking at Bitcoin, it's the production rate is very low right now. It's getting down to 3.125 per block. So, technically gold rushes are a frenzy and it's quite frantic, and people are able to get a lot of gold out of the riverbeds or whatever, if you want that direct analogy. And I think we're past that. The gold rush is probably the 25 block era. 50 block, people didn't know enough. 25 to 12 and a half, I think that was the gold rush. But I'm happy to be wrong, and maybe this is the gold rush still. But I do believe, and I agree with Saylor, that this is the institutional part where the people are going to try to buy the gold. They may not be mining it, and gold rushes typically are mining it, but now they're going to try to accumulate it. So it's some sort of rush, but it's a different thing. And I think it is probably going to go on for the next 10 years, because we're in this transition phase where the Bitcoin standard is starting to emerge, where people will denominate things in Bitcoin, and central banks around the world are going to hold it as an asset for future use and just to preserve purchasing power. And Bitcoin breaks down so many barriers at so many levels that I think it's difficult to fully conceptualize all of this stuff. But the origin of Bitcoin is that people use it to buy drugs. So if you can't buy drugs, then you've lost something there with Bitcoin. But yeah, there is traditionally a separation between money and currency. If you look it up and you look at some charts, there's money on this side, which is more of a conceptual, abstract thing, and then currency on this side, which is physical form, the method you transact it with someone else, or a coinage or something. But with Bitcoin, that's deconstructed. It's one and the same. Money and currency is unified. And that's one of the big game-changing things about Bitcoin, is it changes that. Also, the evolution of money historically has been SOV, store value, unit of account, store of value, medium of exchange, unit of account. It's gone in that sequence. But with Bitcoin, it can evolve it on all 3 points at the same time. Like back in 2017, we were using sats on the Lightning Network as a unit of account, tipping people in sats, paying to draw a picture on like some app with Lightning and sats, right? It's all sats. So because Bitcoin is digital and is information, it doesn't have to evolve in the same historical manner that money has usually evolved. I don't really see any threat to Bitcoin. Like, the threat is always to people, and the threat is people itself. Like, Bitcoin is simply a network. We use Bitcoin as money, but Bitcoin is not money, like in the sense that it is designed to function as a monetary system. We say it is a monetary system because we can use it as a monetary system, but it can't really fail because Bitcoin doesn't really promise you anything. It is just a measuring stick for value, much as we have ways to measure distance in kilometers for most of the world, but for you guys, miles, but or volume, right? Ounces, liters. We have all these different ways to measure things, but how do we actually measure money and value? There is no way. It is just with Bitcoin because it's a 21 million unit ruler. It's just a ruler that doesn't move, and you can try to measure things in fiat terms, like in dollars, but everything is always fluctuating against everything else in the fiat world. That's why you have the 4 FX markets, right? You can move against each one. So it's like hundreds of rubber rulers all stretching at different points trying to measure each other, and people are making money on arbitraging between them and providing liquidity between them, but at the end of the day it's still a bunch of rubber rulers trying to measure each other. But Bitcoin is this absolute finite instrument that can measure everything, and it happens to be digital, and then we can have bearer parts of this ruler, and therefore we can use it as money. But all it is a ruler, so it can't really fail. You can ban the ruler, but then someone will just have to use a rubber ruler in whatever country they're in. And because it is digital, you can't really shut off access to that without shutting off access to the internet, because it is just information. So it's like a immutable ruler that is in your head. I think that's the best analogy for it. So when it comes down to cracking down on it, you can only really crack down on the people, right? You can ban them, throw them in jail for thinking about the ruler. But, that dystopia is always going to be dystopian. So that can always happen. We've seen country-level attacks on Bitcoin banning mining, but that doesn't really do anything. It hurts the miners in that country. They have to shut down their operations. They have all the capex that they've expended already, and it's lost. But it doesn't hurt the network. It benefits the other people that are not getting cracked down on. So you'll see the US try to impose a tax on mining and all these other things, or the EU trying to ban self-custody or limit self-custody. It's hurting their own people. And as long as people are mobile, fingers crossed that they will be, because we've also seen governments stop people from being mobile too, then Bitcoin will always be fine. As long as you can leave and go somewhere else and take your wealth with you, then you're always going to be okay. Bitcoin will be okay. But if you can't leave, then you're kind of screwed. So that's why I think nation-state adoption is important, because as more countries start to adopt Bitcoin, you have more optionality. You have the choice to go to Argentina, to El Salvador, to Prospera, wherever. And these will be places that welcome you and welcome capital. And that's another angle too, which is a lot of governments and politicians forget what money is. They think that it's something they can create and manage, but it's not. Money is really directly related to people. You want people that can create businesses, jobs, innovations, inventions, and economic activity. So that's why, I guess they do understand it. That's why they don't want you to leave. But they don't understand where money comes from and the origin of it being from people generating prosperity.
Mow notes that while countries can ban Bitcoin mining or impose restrictions, these actions only hurt the miners or users within those countries. The Bitcoin network itself remains unaffected. He emphasizes the importance of nation-state adoption of Bitcoin, as it provides individuals with more options to move their wealth if needed. Countries that adopt Bitcoin will attract capital and talent, fostering innovation and economic growth. Mow criticizes governments and politicians for not understanding the true nature of money, which he believes is intrinsically linked to people and their productivity. He points out that the concept of money has been distorted by large, incomprehensible numbers like billions and trillions, making it difficult for the average person to grasp the scale of economic issues.
Yeah, it just seems to be difficult for people to understand. And I think big numbers have a thing to do with it. It's almost like the concept of the big lie.
Mm-hmm.
The bigger the lie, the easier it is to believe. And fiat is the biggest lie, and this is why the numbers they keep throwing at us are so big, like billion, trillion, because the average person has no conceptual basis for what a trillion is. It's just bigger than a billion, which is bigger than a million. So you can hold up a stack. I don't have anything around me, but you can hold up a stack of money, and $100 stack, $1,000, maybe a couple $1,000 is like this thick, right? You kind of know, okay, yeah, it's reasonable to have a stack of money like this big. But then when you get to a trillion, it's the size of a football stadium if you were to print the actual physical cash. So they kind of get you by using these large numbers, and they've just been normalized now. So when you hear, we're at the $34 trillion in debt, yeah, it's okay, but that's actually massive, and it's totally unsustainable. And when we're getting $1 trillion more in debt every day, every 100 days, 10 billion a day, maybe it's okay. It's just a bigger number. But it's gotten to the point where these numbers are actually meaningless. That's why when you're denominating Bitcoin in fiat terms, if dollars or yen or anything, or Turkish lira, it doesn't really matter. Like $1 million Bitcoin, it doesn't matter. $10 million of Bitcoin doesn't matter. What's going to happen is you just lose that fiat denomination eventually. When we hit hyper Bitcoinization, things will be priced in sats. You're going to pay 5 sats for a hamburger. That's what's going to happen. So you might think it's crazy now, but it's actually less crazy than believing in the dollar holding its purchasing power. The money currency part is more challenging because money is dirty. Nobody wants you to spend money. Don't send money to anybody. Keep it with the banks, and don't even touch it. Whenever there is some bust, like they always take a picture of the money like it was an illicit good. And some stores don't even want to take cash anymore because it's become associated with bad things, right? So money is largely become demonized as a currency. So I think that's probably the danger that he sees, and maybe that's why he's focusing more on the property aspect of it. But the value in this construct of store value comes from the monetary use, because it's people transacting. And I think that's probably a more dangerous thing for someone in his position to talk about. But reality is you have to have people being able to keep their own money and store their own money themselves and spend their money without intervention in order to create that store of value for everyone else.
Mow envisions a world where Bitcoin's value is no longer measured in fiat currency terms. In a hyper-Bitcoinized world, everything will be priced in Satoshis, the smallest unit of Bitcoin. He believes that while this idea may seem far-fetched now, it is less crazy than expecting fiat currencies to maintain their purchasing power indefinitely. Mow also touches on the societal perception of money. He notes that physical money has become demonized, often associated with illicit activities. This has led to a shift towards digital transactions and the demonization of cash. However, he argues that for Bitcoin to truly become a store of value, people must be able to own and spend their money freely, without government intervention. Please like and subscribe my channel.